Welcome, everyone. On today's episode, we're going to cover the topic of scaling. And to discuss this point, I have two good friends on the podcast. One of them you might recognize because the Seedcamp team member, James, and I'll have him introduce himself in a second. And our special guest is Dominic Jacquesson, who recently received an MBE for his services to the entrepreneurship and technology ecosystem here in the UK. Now, in addition to obviously that recognition, he's done amazing things at Index. I mean, geez, like if you go through his LinkedIn, you'll see all the great things he's done working with portfolio companies. But the reason why we have him here today is because he wrote this book, which is available online for anybody who wants to either buy the physical copy or perhaps just read it online. It's called Scaling Through Chaos, and the show notes will have a link. And it covers so much good stuff that we're going to get to in a second. But first of all, welcome, Dominic.
Thank you very much, Carlos.
Thank you for joining us. And James, maybe it's a good time for you to introduce yourself and then what it is that you do.
Sure. So I'm the talent manager at Seedcamp, and my role is pretty wide-ranging. Most of my time is spent with founders in our portfolio, particularly at the early stage. So just following our early stage investment through to Series A. And that encompasses a real breadth of different topics, building the best teams possible ultimately, but helping them on best practice, but also connecting them with our amazing talent and advisory networks.
Excellent, James. Well, I look forward to hearing your questions to Dominic in a few. But first of all, just to kick things off, Dominic, you've had a very storied career. You've worked with some of the best companies in the world through Index and prior. And I wanted to understand a little bit about your journey through that, because in many ways, you're a jack of all trades. You have seen through the people function and through other functions, everything from product to go-to-market to product development, technical elements and sales and commercial elements. How did you get that experience? And then, what led to sort of deciding to write a book?
Yeah, thanks, Carlos and James. I suppose I think I've lucked out in that I landed at Index, an environment where my, as you say, very varied background could sort of pay dividends. I've had several moments in my career where I thought, oh my gosh, I'm too generalist. I don't have enough specialism. But actually, with the role I've got, the degree of generalism I have across so many different disciplines has been a real source of positives. I started off my career in strategy consulting, and I went into the sort of publishing business information area. First in a bigger company called Euromoney, and then in a startup, which one of my colleagues at Euromoney set up. And both at Euromoney, I ended up as the COO for their US side. So I was like in New York and whatever. So I had a sort of team of up to 200 people, sort of $80 million business, etc., building all of that out. And I was responsible across all the G&A functions, and quite a lot of the publishing side as well, and a lot of corporate development. And then I joined a startup as sort of, I think there were about 4 or 5 people at the time. And as COO there and a sort of board director or whatever, we started off, as most startups do, when you're a COO especially, you're sort of having to wear every single hat and do everything. You're like right in there with the founder. I wasn't formally a co-founder, but I was sort of as close to as you can get. So I suppose as we built that company up over the next 8 years, I sort of wore the hats. I was the CFO whilst we didn't have it. I was the chief people officer whilst we didn't have that. I was the CMO whilst we didn't have that. So you do everything. And then when you're building out the team, you're hiring people to replace each of those areas. And so sort of you got the hands-on experience of doing it at early stage. I did a lot in sort of growth marketing. We did a lot of consumer and sort of SMB sort of publishing. So what would be a sort of SaaS subscription model now? A lot of events. So there's a lot of sales. We did a few acquisitions. So I did corporate development. So all of those different functions that I was sort of doing. And then when we started going digital, I took that on as well. So I was responsible for digital publishing and digital product and digital marketing sides as well. So sort of wearing all those hats was fantastic. When we went public, but by the time I left, it was 2008, the Great Recession had hit. And the share price was below virtually where it was when I joined the company, because I joined just at that pretty much startup sort of .com boom. and thought, all right, time for me to get out of here. And I was fortunate in that I wasn't a founder, so I didn't have sufficient skin in the game to sort of, it wasn't the same thing as if the actual founder had left. So I left and suddenly went back into the emerging world of sort of startups that was happening in London back then. And that's a huge thanks and call out here to two of my very close personal friends who both were by this stage in the startup world and then in the VC world, which is Saul Klein, who's obviously very well known to Seedcamp, and Simon Levine, who's now Mosaic as well, who are two of my best friends. And they just said, get into the startup world. They'd been saying it for years. And I'd been saying, no, no, no. I was over loyal to the publishing sector, which I was in. And they introduced me and I started doing a whole range of consulting projects with different startups and realized how transferable the skills were that I'd built up, and this experience of building and scaling a company almost from scratch, even though it wasn't VC backed. And that led me to working and doing a lot of consulting with several index portfolio companies. So I sort of came to know several of the index founders, sort of Neil Reimer, Mike Volpe, Danny Reimer, and Saul at the time was also working then, by that point was working at Index, was a partner there. So they were looking for somebody to be the first hire. I think I'm pretty sure it was the first hire ever in Europe of somebody working in what is now called platform, on the platform side. So a non-investor focused on supporting the portfolio. So they brought me in. I was really fortunate. And it wasn't just talent at that point. It was support the entire portfolio on anything and everything that they might be interested in getting advice about or support on. So I had this like crazy wide brief and this massive learning curve for the VC world, but backed up with having a lot of this personal experience of how to build a company, how to work with a founder, etc. So it was a sort of, as I said, I'd had a couple of points in my career where I've sort of had heart palpitations that I didn't have a specialism really to fall back on or a clear career structure. And I was just, I think I'm somebody who always thinks that luck and privilege in life is way more important and outweighs what you personally do. Not to disempower yourself, but just as a way of showing gratitude. And I'm incredibly grateful that I had that opportunity to come into Index and absolutely loved it, and which is why I was there for 12 years until just a few months ago.
Well, I am going to explore what you're doing now towards the end of the episode for those of you are wanting to know what he's working on now. But I wanted to go into the book a little bit because the book, I presume, is the summary of all those lessons into something distilled down to something that can be shared. There it is, Scan Through Chaos.
Yeah.
So just for those that are only hearing about this for the first time by listening to this episode, I'm just going to walk through a little bit of the structure of it. And I agree with the flow of the structure, by the way. I was thinking about, like, if I had to write on this subject, which way would I order the chapters? And I think that's a critical part of, any kind of work that is more of a how-to versus like fiction, right? And, you talk a little bit about the attitude about surfing the edge of chaos, the life cycles of startups, but very quickly you get to the foundations of success. And I think, and we can talk about that a little bit, maybe after we cover people a little bit, but, you're talking a lot about values, culture, diversity, vision, mission, strategy, and all these things are things that are sometimes, and to borrow Saul Klein's words, sometimes things seem so easy that you don't do them, or they seem so hard that you don't do them. And this seems like one of those that fall into that category. And I agree that you put them in advance of the next chapter, which is hiring people, because if you don't have those things defined, what is the context they're joining you on? You then continue with managing and retaining people, building your leadership team, dealing with complexity, scaling your technical team, go-to-market team, G&A team, and then you conclude. And we'll explore these a little bit more in more detail in a second. But I really loved how you structure it, very applicable, and the website version of it is very readable and accessible. But I wanted to maybe kick off talking about your book with one fun question, which is, as somebody who's written my own book, and this is my chance to promote, because you have to do this when you write stuff.
Of course, I know.
Fundraising.
It goes against probably both our personalities a bit, Carlos. But
there we go. The fundraising field guide, guys. If you haven't bought it, now's the time. Anyway, so when I wrote the book, one of the funny things about it was that it was a learning exercise as much as it was a catharsis exercise. And there are things that I had to research and or explore to fully commit them to words. And so I'm wondering, what do you know now after the process of writing it that you didn't fully get or even perhaps even got wrong before you started writing it?
Yeah, so it's a really interesting question, and I fully sort of agree with what you're saying. I think there's a lot of stuff in terms of the detail, because it's a pretty comprehensive book, as you say. It goes across, for instance, the sections on functional scaling, right? There's the stuff around the whole organization and how you think about that, all the sort of big picture words, mission, vision, strategy, etc., that you talked about. And then there's functional deep dives. And some of those functions I was really familiar with, others less so. So if you're going to write something comprehensive, you have to sort of fill out some of the points. So it's sort of asking those questions like, I never got around to asking this point, this very specific point, but I'm interviewing as part of this book. It's my opportunity and my excuse to interview and ask a lot of those questions to just fill in, fill in out. I have a lot of quotes, so I might just like throw in a few my favorite quotes as we go along the way. But one of my favorite quotes at this point would be like, lean into your ignorance. So where you feel a sense of ignorance, just educate yourself, learn, which actually is another one of my favorite quotes, which really applies to writing a book, which is, if you're underthinking, read, and if you're overthinking, write. So it's a sort of get to that point where the ideas are so bubbling in your head, you've just got to put them down. You've got to get them out there because you've got a structure, you've got everything in there, and just push it out. But when you're not in that mode, you've got to learn, read, talk to people, etc., who really do know. So I think there's a lot of those sort of detail bits, which you could almost like the mortar of the book. You've got the bricks and then the mortar to fill out all of that sort of detail. So these things around like how exactly do you build up team structures in a technical team of like building pods and things like that, and what's the rationale and what's the relationship between a tech lead and a product manager or whatever. So there's all those elements and how do they collaborate effectively. And then on the big picture, it was how do you fill in the big picture? And I think something like culture, which probably is the word which has the most woolliness to it, but which we all know is so critical. So actually, I think of it in terms of the scaffolding, which I remember somebody told me many years ago. What are the scaffolding of culture as you grow? So you can have you start with your values and having a sort of sense which starts to solidify as a founder in terms of how you operate and what's the type of organization you want to build around you to sort of complement that and to be effective. But as you grow, you've got to build those scaffolding, the building blocks of your culture. And those are processes. Those are like, what's your hiring process? What's your compensation process? What's your planning process? What's your performance management process? And those are all things which are much more tangible and real. And those are what actually then constitute, on top of your values and the more subtle stuff, what your culture actually, how it comes to life and how you actualize it in a scaling company when there's too many hundreds of people potentially for you to just be role modeling it and expect that to permeate by osmosis through the organization. Has to be more structured.
On that topic, before I jump into my question, I just want to say I'm a big proponent of this book and I use it as a Bible for a lot of our founders. So if you're a founder and you haven't yet picked this up, it's highly tactical, so it's well worth doing. You talk about the scaffolding, if you will, in an organization and how it grows with definition. At the start, the frameworks, the role descriptions, they're pretty bare bones. And quite often that's because the founders don't necessarily know what they need. They may have an indication, but that definition grows over time. And you talk to your personal experience. So this is something maybe you can align to that, not just the learnings from the people you've met, but in that early stage, so many employees within startups have an amalgamation of many roles. So a product manager may be doing product, but they may be doing a bit of sales and maybe even engineering. At what point do you have to get away from that, would you say? Because you can't have tens of employees doing an amalgamation of roles. It's just simply not scalable or sensible. So where's your view on that?
Yeah, no, it's a really good good point. And one of the ways I structured the book to address exactly part of that is breaking it up into stages of startup growth. Because I think, okay, you can define stage by anything from seed, Series A, Series B to revenue point or whatever it is. But when you're talking about building teams and almost any organization, headcount is just such a fundamental driver of complexity and of what your needs are. And headcount will follow on, obviously, from revenue stage and fundraising or whatever else. But it is like a fundamental building blocks. And so just, it's slightly arbitrary. Obviously, at the margins, it's arbitrary, but I broke everything down, like the recommendations in the book, as a roadmap of 0 to 10, and 11 to 50, 51 to 125, 125 to 250, 251 to 500, 501 to 1,000. And so everything in the book, like when you go into processes, for instance, like what should you do on performance management? The advice is fundamentally different at each of those stages. What is stage appropriate? And that's such a sort of key thing, because I've obviously read so many blog posts and things and people saying, performance management, you should do it this way, or you should do it that way. And it's like, well, you're both right, but at different times in this journey. So I wanted to make sure to sort of tell that story. So it does become quite a complex book because you've got all of these different areas it's covering. And then within those areas, it's covering by stage, how do these things evolve and why? And also the other bit, which is really fundamental in the book, is around how it varies a lot by business model. If you're a SaaS company, the way you do that, a lot of these things, maybe not so much on performance management, but like building out your leadership team, whatever looks or a particular function can look very different between a SaaS and marketplace, D2C, B2C app or whatever. So try to make it also appropriate to point out, look, this is fairly common across all business models at this stage, but this actually starts to differ, and this is why and how it starts to bifurcate or split out in that way.
Interesting. In terms of building that leadership team, which you've just referenced, it's something that comes up a lot, as you can imagine, especially with founders that are either solo or just a dual founding team. It comes up quite quickly in that journey as they build their teams and have to start letting go. We typically see our founders not hiring at the VP and C-suite levels too soon. We think it's not necessary at the stage of a small team. But I'd love to understand how you have helped the index portfolio navigating that question. Obviously, there's always nuances, as you referenced just now, so there's not a hard and fast rule. But I'd love to understand how you go in and work with the founders to evaluate the need for maybe their first VP or their first C-suite.
Sure. Well, I sort of worked at this stage with I think I counted, because I have subfolders for every company I've worked with. It's like well over 200 now across those 12 years at Index. But I think some of the first questions I ask when I sit down with founders, and this could be a seed stage, a Series A, first sort of point that Index comes into the play, or a growth stage investment. So it can be a number of different entry points. But I'm always asking sort of snapshot. Like first, I'll read all the materials and stuff so we're not wasting time, understand as much about the business as possible before I go in, and have hypotheses about what the go-to-market approach is going to be, what the milestones are going to be, etc. But validating those. So it's like, where are you now? A critical part is like, what's your product focus? So what are your product milestones? And what's your go-to-market motion? And how are you seeing that and why? And then what's the current team you have? And a particular emphasis on existing people in leadership roles or hypo talent, right? High potential people that the founders think could be stepped into a leadership role. And then it's really putting those two together. So what are your goals? Where are you likely to have gaps in your people or leadership functions that are going to stop you hitting those milestones? And how to think therefore about prioritizing how those are going to be filled, and what sort of shape and profile and characteristics of individuals you're going to need for those. And that usually, doing that process, combined with a lot of pattern recognition and now a lot of data from the book and stuff to build it up about, okay, well, a SaaS company at Series B and you don't have a VP sales, that jumps out at me as being really, really an issue. Like, you don't even have VP sales, let alone a CRO. What's going on here? And then you get the story and like, are you feeling the pain? So you go in with hypotheses based on that pattern recognition as well as to what the prioritization should be. And it is always has to, everything is about a trade-off. So it's about prioritizing what are the real key elements that you need to look at. And a lot of it is then about leveling. Like, what's the sort of leveling of the type of individual? Like, should you be bringing in a CRO straight away or hire a VP sales first? Like, how are the foundations of your go-to-market? Is your go-to-market evolving? Are you going really rapidly up the value chain to addressing enterprise clients? Is it still in flux, or has it started to steady down and stabilize? And is your product strategy supporting that go-to-market strategy? And all of these factors come into play to help you determine and help shape with the founder how to sort of prioritize, level, and therefore define what their hiring goals should be on the leadership side.
Super clear. I think that's a very good point, that we're in a fortunate position now where so much data has been collated across the ecosystem, not just in the US, but now in Europe, that there are a ton of learnings to be taken from the success stories. Not necessarily to take it completely as gospel, but certainly a good guidance for potential black holes in your team. My final main question, which is probably a difficult one to answer. So sorry for throwing a curveball here, Dominic, but many founders, when they first hire their team, struggle to let go, right? It's relinquishing the decision making ultimately. You reference hiring your first sales leader in that last point, and that's a great example. Founder letting go of the commercial strategy. How can you mitigate the risk for a founder when making a hire like a VP sales or a CRO to make sure that decisions are aligned? Because there will come a point where the founder is no longer involved in some pretty critical directional changes that take place. Have you seen a good way of managing that?
Yeah, that's a great question, and it's very true. And I suppose I know if the whole founder mode sort of set of memes will come up at all in this conversation, but it's been interesting reflecting on that as well. I mean, I think, look, the ideal version, and like I said out in the book, and obviously the world is not ideal, but where you want to sort of get to is where there's a progressive letting go across functions, because you're hiring more and more senior people. So initially, a bit like I was describing myself in that sort of co-founder COO role, you're doing the job yourself. So you sort of know what's needed. And then you don't go straight to hiring a CFO. You bring in a controller, for instance, first. And then you might bring in a director after, and then a CFO. So there's a progression of letting go. It's not overnight, suddenly everything, your world changes and you step completely away. You gradually let go. And then through that process, you as a founder are building a deeper understanding of what the needs are in that particular area, like sales or finance or whatever. And you also know how to identify the caliber of individual who's going to take things up a gear and allow you to let go further. So it's that sort of sequencing thing. I think the biggest problems come when if founders don't let go for ages and ages and ages, and suddenly everything's about to burst. And it's like, something's gone horrifically wrong in the cash flow planning. And it's like, oh my gosh, we thought we had 9 months runway left. We've actually got 3 months. Oh, we need a CFO. And suddenly there's no foundations on which the CFO can be brought in to sort of do an effective job. And the founder's terrified of letting go because they've had an existential crisis. And the same thing can happen in almost any function. That's the worst situation to be in. So obviously ideal, and obviously at Seedcamp, you're fortunate in that always working with earlier stage founders to try and get those things right from the outset. But I think it's that progressive thing. That's the best way for handling those sort of transitions and that progressive letting go. It's more controlled, it's more calm and measured and intentional.
I think that's part of the key takeaway for me is don't leave it too late, as things can blow up, but that's also an ego thing to some extent. You would hope that somebody's self-aware enough, but sometimes awareness, just even listening to this episode and perhaps calling it out, allows somebody to keep it in the back of their mind and be like, is it time for me to gradually let this go in preps for identifying somebody within my team who can take this further? I really liked the first set of questions you asked, Dominic. Really interesting. Obviously, reading the material is very important, understanding it, but critically, you start hypothesizing all the functions and all the needs as if you were the founder of the company, which is, you know, it's kind of, we all do it intuitively, but it sounds like you do it more systematically when you first start engaging with somebody. And then you go through the process of validating those notions in the conversations. Now, we've been in this industry long enough that we hear tons of advice all the time. And some of it has become almost like word, has become biblical in many contexts. What common piece of advice do you think is right, but undervalued? And what is another piece of advice that is temptingly easy to digest, but intrinsically wrong?
Great question. So take it the first one. Let's answer the first one first. So is right, but hang on, was that the one which is
right,
correct,
but generally undervalued?
I'd say, I mean, again, loads of them, but really paying attention to your hiring bar and having a hiring process which allows you to effectively identify, assess, and close the best candidates available. Everybody knows it, but it's sort of so often not actually, it's so difficult in the hubbub and sort of craziness of startup life to stick with that when you're trying to fill a role. And we sort of cut corners, or we don't prioritize investing in the process that's really going to deliver the best outcomes. And when you actually look at how many people a thorough process should identify, evaluate, and assess in order to get the best person. Yeah, sometimes, you can have shortcuts. You can build from referral networks and have an effective way where you've got a lot more qualification on a candidate to start off with. You can't always rely on that. And just the amount of thoroughness you have to put into it. But if you don't, you just pay the price just so badly on so many fronts. Like unwinding a bad hire or the wrong hire is really poor. So I'd probably put that one. I try and put a lot of advice in the book about, and there's some brilliant sort of like from one of our portfolio companies, Incident.io, where the CTO, Pete Hamilton, lays out how they have an internal process, even though they're quite early stage at that time, they're like Series A, but they had an internal process for qualifying interviewers where it was like, you have to do 3 or 4 shadowed interviews with an already qualified interviewer, then 3 or 4 reverse shadowed things. And then you get a sort of qualification that, yes, you can go solo as an interviewer for this company. But until you have that, you're not allowed to. And then they're looking at what's their hiring plan, how many interviews are they likely to have to run for those, therefore how many qualified interviews are they going to have, and looking at that 6 months in advance so that they have the bench of interviewers who they feel confident are qualified to run interviews. Now, very few startups do something like that, but I think it's such a valuable type of structure and framework. It's so key, because once you start getting B players, or as somebody said to me, B players or A-holes in the company, like you are lost. Everything starts to go wrong. You can't keep going. So I put that one in your first question, like stuff talked to, but it's often not put into practice or is undervalued, even though everybody knows how important it is. That would be that one. And then the second one, sorry, I'll let you. I thought you were
No, I said
something.
nice. I agree with that one. You always have to keep that bar high. It's very easy, as you said, to when you're desperate to fill a role to lower the bar. But yeah, what piece of advice is temptingly easy to digest, but intrinsically wrong?
Temptingly easy to digest. I think there's a lot of things thrown out which are thrown out without necessarily being relevant to the business model or stage that a company's at. So there's often, like, people will say, you're a solo founder, you need a COO, something like that. Now, that's not necessarily true. Like, I rarely, occasionally see it work very late stage, but I rarely see a COO role, like an external COO, work in a SaaS company. Like, even if you're a solo founder, I would focus on more specific go-to-market skills or whatever for that sort of early hire or whatever. And then by that time, you've built out, if you get to the point where you have a VP sales and then a CRO and you've got somebody really strong in other areas, there isn't much need for a COO. And that's completely different from like a business model, like a marketplace, where you've got a really heavy operational component to the business. You've got this whole dynamic between supply and demand side that needs to be managed. So sometimes things like that are thrown out and they're not necessarily right. So I always think whenever I'm writing, because Scaling Through Chaos is the 4th book that I've written with Index, and always try and have this if this, then that framework in everything. So really, what are the key drivers that get you to the right decision? Because that's the thing, advice is often thrown out as if it's just true. And another one in terms of like European companies expanding into the US, which was another book which I did a few years ago with Index called Destination USA. And there was often this thing like, oh, founders got to move to the US. Or other things where sort of somebody else saying, no, it's not necessary. We build up an incredible business in the US without a founder moving. And it's like, right, what's the if this, then that sequence which drives that difference? And came up with like these 4 archetypes in the book. And it really made it very, very clear, like in what situations is that pretty much essential? Like if you're a SaaS market focusing on enterprise clients, you pretty much have to have a founder move to the US if you're going to succeed. If you are if you're a D2C business or a B2C app business and you're distributing through an app store, it absolutely is not necessary. You can be king or supercell and have amazing success without having a tiny team in the US, even if 70% of your revenues are coming from there. So it's teasing out, rather than just blithely taking on advice that's thrown out. It's saying, is this correct for my business and my business model and for my stage and for the characteristics overall of the business? And really take some first principles, which we try and do in the books to avoid just falling into that, which is why they're so long, obviously. But that's the rationale for it, is to really get under the skin of what the drivers of the decision framework are to think you come out with the right one.
It's funny because it leads very nicely to the next question I had for you, because there are things that are like the advice that is sometimes given to founders about moving to the US that needs to be broken down into circumstances, contexts where it's more relevant than others. And one of the ones that we hear quite a bit about, especially as you think about scaling and sort of setting team goals across the organization and then alignment of what it is that we're trying to achieve, we hear about the religion of KPIs and OKRs, whichever one of the variants of the religions you want to take on. I want to hear your thoughts on that. When is it too early to lock down certain types of these, and therefore you're sort of choking innovation around areas that you haven't even fully discovered yet? And if you don't do that, then how do you recommend navigating the chaos of setting goals whilst you're not fully committed to them?
Yeah, these are great questions you guys are asking. It's a really interesting one. And I've got very mixed feelings about OKRs. I've seen them work incredibly well. And I've also seen them just create that sort of setting your organization in concrete and slowing everything down. I think one great insight I had from Stefan Kurgan, who was the COO at King, who has also done a lot of years working in sort of SaaS and B2B software businesses. You're saying it's so different. You're saying like, if you're like operating it as like a king and you have incredible marketing data coming in day by day, week by week, unbelievable like depth there. that's what drives a business, is like you're constantly responding tactically and pursuing like, where's a great opportunity to invest more in marketing, which channel, which sub-channels, which sources. And you can really sort of deploy capital on a more fluid basis. And in that sort of situation, having OKRs or like two strong metrics on the sort of growth side can really, as you say, it can over constrain what you should do. You know, because in B2C marketing, you have to jump on marketing opportunities when they come up. It's a very tactical thing. Whereas in other sort of business models or other sort of structures, if you're, like I said, in marketplaces, there are so many things around getting a balance between supply and demand, etc., growing your supply side versus your demand side, your capabilities. That there, I think those type of models, you need to have more structure and framework and more planning in order to oversee them. And as you grow, you tend to need more of it anyway. You're coordinating multiple teams, and that needs a level of orchestration. It doesn't happen purely by osmosis. So there's a business model element, again, that drives the difference, and a stage element as well. The other bit, which I think fundamentally drives that, is just what's the founder's style and personality. Some founders are very metrics driven, are very analytical, and therefore they lean into it. And I'd say embrace it then. I've seen that with several founders who are super like that, and others want to keep that flexibility. So that's the other characteristic or element that goes into that decision.
Yeah, I agree. I mean, I asked you that question kind of also having my own opinion on it, which is that in many ways there's a pre-product market fit period where you're basically focusing on lead metrics that might correlate with some outcome, commercial outcome. And then there is a time when it starts feeling more accurate to start nailing down some of these things. Which brings me to maybe the last point, which is risk. So this entire conversation, we've discussed risk in different ways, whether it's hiring the wrong person, setting the wrong goals, not letting go. And if somebody starts a company, they're already willing to take a certain amount of risk. It doesn't come without having some level of tolerance for that. But what do you think is the fine line of acceptable risk when scaling? Where would you say is the biggest point of failure in risk taking in terms of hires, processes, culture? Because you can't get everything right. And you're going to have to take some risks. Where have you seen it gone well, and where has it gone wrong?
It's a great question. I'm going to have to think a bit on the fly, because I don't have I haven't come up with a risk framework. I always like try and rely on having a framework I've already really thought out. So I'm having to think a bit more on the fly here. But for a start, right, if you take VC funding, you are going down a sort of a risk trajectory. You're stepping up the level of risk because investors expect outsized returns and outlier returns. Yeah, we all know VC is a power law game. So by taking on VC investment, you're going to have to expect your board is going to be pushing you for outsized returns, even if the risk is high. I think there are things you can do to somewhat, especially when you're a bit somewhat later stage, to somewhat de-risk. I'm a big fan of founder secondary, like by at least a measured amount of founder secondary, so they can get some liquidity, and for some other key people in the business. Because I think if the founders do it, then other key individuals should be able to as well. That then takes away, because otherwise you've got this massive misaligned risk. The board is thinking on a portfolio basis and would rather a 70, being really blasé about this, but they'd rather there was a significant chance of the company imploding and going to zero if there is still a relatively sort of a visible, sort of viable route to something being worth 10 billion in the next 5, 7, 8 years or whatever. So doing things that you can on a practical basis to align risk is really important. If you've got a founding team and executives who've got mortgages and kids at school and whatever else, they are going to be fundamentally misaligned with that objective as the company grows. So being able to at least let them, if the company's doing well enough to support it, to take that risk away, that's always a really good thing. So look at opportunities there are to align the risk profiles of the different stakeholders, right? That's a key thing. And then the second element would be around sort of actual just existential risks that, some of this just the sort of core process of the business, like we talked about, having a really strong finance function. I've seen at least a couple of companies, sort of sadly, where there's something gone really badly wrong on the cash flow modeling, not in the index portfolio, but actually just outside in my work with other non-portfolio companies, where they just almost imploded because they just didn't have a grasp on their cash flow. So what can you do to sort of de-risk on that? Legal risk is another aspect of that. And the bigger the company, the more is at stake. So what can you do to strengthen your G&A and the sort of risk functions to avoid that? And then the third one is commercial risk, is like how much are you willing to take on? And I think, I think that can break down through all sorts of directions, but having the right alignment, that you're willing, that the board and investors are aligned with the leadership and the broader team around, we're going to go for this, or what level extent are we going to go for this? And, I think if you're doing sort of reasonable planning, we used the example of US expansion before, like doing your homework, looking for the signals. Are you getting inbound flows for prospects from customers showing an interest? What are the signals that are showing that, hey, actually we've got a strong chance of winning in the US here? Are you winning on bids when you compete versus incumbents or bigger players? All of these types of things that can de-risk, researching the competitive landscape, the regulatory landscape, whatever it is, before you expand, so that you have a high level of conviction and shared conviction around the board table, around the risks that you're willing to take and how much sort of cash you're going to put into trying to make a success of that. So these are all, each situation is unique. So without having a specific situation, it's harder to get less generic than that. But I'd probably say those are three elements that I think to sort of managing and aligning risk taking effectively, which you really should sort of go through. But then like when you've got the conviction, you've got the alignment, you like commit and it's all about execution.
That's a very good way to start framing the answer to the question, because it is important to remember that once people take venture money, it's a different trajectory and it changes the concept of risk for everyone in the organization. One of the points you made was around founder secondaries. What recommendations do you have there for best practices in terms of stage, profitability, just in general? Because, some people might expect it too soon and other people might leave it too late. Just the general stats or anything that you might have to share there.
Yeah, I mean, obviously a lot just depends on how effective, how well the company is doing, and you can't have founder secondary or team secondary unless you've got excess investor demand at a fundraise. So it's that's a sine qua non. So it sort of presumes the company is doing pretty damn well already and is being pretty damn successful. When you have that point, I mean, roughly speaking, I'd say definitely it's sort of Series C. Sometimes it's Series B, not at Series A. And this obviously aligns somewhat with when you've got not just product market fit, but go-to-market fit is established. So you have more solidity around what the execution profile looks like. So Series A would be too soon. Series B, especially, you have to look at the founder and the team circumstances. What's their background? What's their lifestyle perspective and personal circumstances? And you really then have to look at, to what extent might the team be held back from being aligned with the board in really going for it because of those personal circumstances? And that's, so you've got some aspects, some elements of the company where not before B, and some elements of personal circumstances which might lean more towards B versus C. And that's, I think, probably the main things. Obviously, you've got somebody who's a second-time founder who's already made a huge ton of money. I'm thinking, or example, like in the index portfolio, like Asaf at Wiz, right? He already had a reasonable, pretty damn good outcome his first time around with Adalon. So he went into Wiz. It was like him and his co-founders were like, yeah, we want to do something like, orders of magnitude more successful than analog. And they had the sort of liquidity and the sort of comfort buffer to go into that fully aligned, knowing what it was like. So less of an issue in a situation like that. So those are some of the sort of different personal circumstances that can play into it. But it's the job of the board to create that alignment and to identify where there's a rub happening and how can you diffuse that tension. And that's the overriding piece.
Excellent. Well, with that, we left it to the audience to wonder what it is that you're doing now after this amazing career. And I wanted you to share with everyone what it is that you decided to channel your intellect towards now.
Yeah, thank you, Carlos. I'm really enthused. I've had 12 incredible years at Index. I left at the end of June. It's been like, plan had been afoot for a couple of years before then. And it's like, I'm now in my 50s, right? So, again, let's talk about personal circumstance. My personal circumstances have changed a lot. My kids are nearly adult. And I'm thinking, right, what do I want to do for the next 10, 20 years? And I could have stayed in Index, and I was having a terrific time and an amazing journey working with incredible people inside and out. But I thought, okay, it's time for a new chapter. And my overriding, driving motivation is sort of intellectual curiosity. And the question, which is, since I was a teenager, has sort of been my passion, has been around the mind-body problem. So consciousness, the nature of consciousness. So it's sort of one of those things. I'm not religious, but that is as close to, that's the spirituality and everything, the essence of what I think, what makes life meaningful. So I thought, okay, I studied psychology and what would probably be called neuroscience now as an undergraduate, and I absolutely loved it, but didn't have the means to carry on pursuing that at that point in time. So it was like, okay, I'm fortunate. I'm in a position where I can perhaps lean into that other passion other than the startup world and really dive into it. So I've just started a master's in neuroscience at King's College London. So I have my student ID. I love going up to people and saying, what are you doing now? Oh, I'm a student. So it's sort
Student
of slightly,
discounts. You can buy Apple stuff for cheaper now.
I know there are different student discounts. I'd feel slightly wrong if I was leaning too heavily into the discount side of things, but the sort of student mindset and of learning, right? I said earlier around, if you're underthinking, read. So I've been doing a whole load of writing because a whole lot of my experience and my time at Index just pulled so many different thoughts and ideas and things I wanted to push out there, and with the Index team, try and sort of celebrate and share with the broader ecosystem. And now I want to go back into proper full-on learning mode. And I think that's going to be at least a 10-year journey of really exploring what is, in my mind, like the biggest question of meaning and life that exists, and to sort of dive into it with that sort of beginner's mindset again. So yeah, that's my little personal journey. And I suppose I have a sort of longer term ambition, maybe of writing a book about that topic as well. So
I look forward to having your summarized worldview.
One thing I would say is that I am still really interested in the startup world. So I'm stayed on as an advisor at Index. I'm continuing to sort of build out because we've now got a publishing arm called Index Press. So I'm sort of working with the team there on various projects, but I'm also, with my neurotech sort of hat on, I'm very keen and open to engaging and doing what I can to advise and support founders working in that area, because I think it's going to be a really exciting area over the next 5 years. There's so much going on in sort of brain-computer interfaces, next-gen AI, etc., which is drawing more between AI and brain, how the brain works.
Yep. As a big fan of Westworld, I look forward to hearing your unified world theory.
Yeah, hopefully the mission will be slightly different, but
exactly. Well, Dominic, thank you. It's been an amazing chat. Obviously, so much more we could have covered, but it was a great joy to spend this time with you and hear your answers. And James, likewise, for asking questions and being involved. Guys, if you're listening in, check the show notes. The link to Dominic's book is there. Get it on Amazon. And until next time, bye.